Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, November 29th, 2021 episode of DecisionPoint. My name is Erin Swenlin from DecisionPoint.com, and I'm here with my father, Carl Swenlin, and we are going to try and get you prepared for the week ahead. Certainly, Thanksgiving brought us some interesting market action, wouldn't you say, Dad?
I would.
We had a big discussion earlier in the week about how, well, we're gonna put out our weekly wrap on Friday and we'll discuss it. But usually, it's a half day. Probably nothing's gonna really happen. Kind of didn't turn out that way, did it?
No, I can only remember one other Thanksgiving Friday that was a heavy down day, and that was decades ago.
Well, we keep setting new records, if you will, with the market as of late. So not a surprise, I guess, that we should see something a little bit of an anomaly. Well, today on our agenda, we will be covering the SPY and the indicators. Carl will be going over that with you. I will be looking at the sector CandleGlance along with Carl. Then we're going to talk a little bit about bias assessment. We show you that chart every week when we do this, but we don't necessarily talk that detailed as far as how that analysis goes, how we can determine from that one chart the short-term, intermediate-term, and long-term bias in the market. And I think we found it to be a very important and useful tool. So we wanted to talk a little bit more about how we use the Golden Cross Index and the Silver Cross Index to help us with determining the market bias. And then I will finish off with 3 diamonds of the week. One was from last week for my DecisionPoint Diamond subscribers, and it still is really moving well. We timed our entry really nicely on that particular stock pick, so I definitely want to share that with you. And like I said, I think there's still some upside available. I should say it is Cyber Monday. And even if you are only watching this, probably 5-6 days later, no worries. You can still take advantage of our Cyber Monday special. If you buy 1 month of any subscription, you will get 1 month for free. You don't have to use a coupon code. You just subscribe. We go in and we adjust your renewal date for an extra month out so that you do get that extra month for free. And we will have this going on through December 2nd. We may keep it going till December 4th, but we'll have to see how it's running at that point and the interest level. So get in there and get your free month of DecisionPoint. Take advantage of this Cyber Monday special. It's really the best special that we offer all year long. Also want to remind everybody that we do have a free live trading room on Mondays. I host this from noon to 1 p.m. It is free registration. Just sign up for our free newsletter and you will get the link to join us in that live trading room. It's definitely interesting. I have my own discussion, but also in the chat, a lot of the viewers also get involved and they have their own chat about the market and what's going on. It's really a lot of fun. I love doing it and I would love to see you there. So let's get back to the content here of the DecisionPoint indicators, et cetera. So right now we're looking at the DecisionPoint sector scoreboard, and this tells you how many of these sectors are on intermediate term trend model buy signals and long-term trend model buy signals. A long-term trend model buy signal is a golden cross buy signal. So we have a golden cross on all of these sectors currently. The intermediate term trend model is a silver cross buy signal, meaning the 20 has crossed above the 50-day EMA for a silver cross, and that gives you that buy signal in the intermediate term. Now, of course, Comm Services is the only one right now without an intermediate term trend model buy signal. And I have to say, when we go and start looking at those sector charts, that particular chart is still quite bearish and still very ugly. there aren't really any sectors out there that are looking particularly healthy, but we'll talk about that a little bit later. So let's go ahead. I'm going to pass the screen over to Carl to give us a look at our market charts and all of the indicators. And of course, we'll cover Bitcoin, oil, bonds, all of that.
Okay, let me start out, first of all, with a comparison of the cap weight and then the equal weight averages, looking at the four major indexes that we follow. What I wanted to point out is here's the percentage change on the S&P 500. On the equal weight RSP, it's only 0.84% up. So we have actually equal weight doing better in the mid cap, but it's not doing so great anyway, but it's less than 1%, not even 0.5%. Small caps, they were weak today, went down, and the equal weight is even down about 3 times more than the cap weighted. And of course, the NASDAQ 100, that was up 2.17%. And the equal weight on that was only up 1.42%. What the significance of this is that this was not a broad rally today. It was a bounce, but it was primarily focused on the cap weighted averages on the large cap stocks.
Yeah, small caps really took a bath today for sure.
Yeah, that's not a good sign. Okay, looking at the SPY for today, we did, on very, very surprising down day on Friday, and we got a very nice bounce today, filling the gap and then some, but it closed just about at the bottom of the, the top of the gap that was set on Monday. We had a very high volume on Friday, and still we had higher than the 1-year average daily volume on today for the SPY, and total volume, S&P 500 total volume was much higher than the daily average, and that's a good
high
thing.
Volume move to the upside. Is this? Are we looking at a climactic activity today?
Well, we'll see. Keeping you in suspense. Looking at a 1-year daily bar chart, you notice we got on Friday we did hit an very oversold level on the VIX, and we bounced back within the bands today. I'm not. That's ultra short-term bullish. That's all. On your very basic technical information, we've got the advanced decline line ticking up today, advanced decline volume ticking up, but notice both of them were diverging downward into that all-time high on last week. The Silver Cross Index is continuing downward on all of the 3 averages. The 3 large major indexes. S&P 500 and NASDAQ composite is below 50% now, and that's certainly bearish. And NYSE is getting close to 50%. New highs and new lows. We hit the lowest in a year of new lows on Friday, and it was equal that today, which that's not so great because price was up today. So the ones that are heading downward, they're hanging on to their direction. This is not a great deal. This is not a big divergence here, but it's still not looking as good as it used to in the last 1 year period. Looking at, again, the three large middle cap and small cap stocks, 64% on the S&P 500. The mid caps are 66%, and small caps are 62%. So they're all about the same, and that's not really so great. As you can see, historically, we're in a much weaker area than we have been.
Let's unveil it.
Here we go. No climactic activity today. We use the SPX total volume as kind of an extra signal when you have these other indicators showing climactic activity. But today, it's really no climax in my opinion.
Mm-hmm. What did you think of the one on Friday? Because I know when we were discussing it as far as the weekly wrap, looked like an initiation to me.
Well, yeah, that's what I called it. It's a downside initiation climax, and it wasn't right immediately off the top, but it was only 3 days after the all-time high. It would have been on Monday, I guess. Yeah.
Mm-hmm.
So yeah, that's the first choice I would have it with that configuration.
Mm-hmm.
Do you want to talk about the bias assessment now, or
I think we probably should, since the chart's here. We don't have to come back to it.
Okay. Well, what we're trying to do is figure out which way the market is leaning. Obviously, the Silver Cross index is not so strong. The Golden Cross is still not bad. It's almost 80%, but it's still diverging from what back in the early part of this year. The components of these two are the stocks above their 20 EMA. That's down to 24%, and that's lower than the stocks above their 50 EMA, and by quite a bit. So that's telling us that we could expect, if it remains this weak, we can expect a lot more Silver Cross
losses, right?
Losses. Yeah, they'll have a lot of dark crosses, as we call them now.
So short-term bias, we kind of determined from comparing those stocks above their 20 and 50 to the Silver Cross percentage.
Right.
Mm-hmm.
And then we have the stocks above their 200 is 70%, when again, the stocks above their 50 is at 46. So that means we have potential of another 30 points down on the Golden Cross, actually. So another 30 points worth of death crosses, as they call them.
Mm-hmm. I would put us under 50% if we see that.
Right. So the bias is distinctly bearish.
Right. So the readings, the Silver Cross Index reading, is that more of your intermediate term bias just by that reading, or really making that comparison? Because when I look at it, usually I'm looking at those 20 and 50, the percent of stocks above them, comparing it to the Silver Cross for my short-term bias assessment. But then I know we've often talked about just looking at that silver cross index percentage to kind of give us an idea of the intermediate term bias.
Well, that's it. This is the silver cross is an intermediate term indicator, and certainly it's a lot weaker now than it was. It's a little boat was about 94%, say, back in May, and here it is down at 64. So it's distinctly weaker. But the bias being we have this potential for, as I said, another 20 points down on the Silver Cross Index.
Right.
That's things could improve immediately tomorrow, but I'm doubtful on that.
Yes, me too.
Okay. Short-term indicators. So the STOs ticked up today. Not a surprise there. Actually, the STOV ticked up on, well, it was down the day before, but it's still higher than the lows right over here. But they both ticked up today. Again, we've got these two have not updated yet. Should have pointed it out on the bias chart. Yeah, the stocks
Right.
above. They don't update much later in the day. ITBM, ITVM, these are intermediate term indicators. You can see this one here took a dump. This is PMO crossover buy signals, and that's really getting low. Might improve today, but it's not doing well. You notice how it's hard to make an annotation, but you can see how these ITBM and ITVM were already dropping off before the all-time high.
Yeah, not a good picture.
No. Bitcoin up today. It was up quite a bit earlier in the day, but it got back above this line of support here, line of resistance it was, but still we've got this rounded top, and I don't. It's not recovered from that yet, in my opinion. The dollar is has been stronger. Let me go back to the for a longer period here. Looking at a 2-year chart of the dollar. This is back when the bear market started, and you see how the perturbations here were quite extreme. And here we can look at Friday as another potential beginning of another bear market. It's certainly not as unstable as it was back in this point, but that's something to remember. Is that that's a good thing to compare it to. And I don't know. I don't really understand the panic that we saw on Friday, because it was there wasn't any information, and except a new variation of the COVID, and I couldn't see what the panic was about, but there it was, and no good reason when it gets down to it, and that's often how it is. So we got a nice saucer shape here, and pulling back from the breakout. Not much to complain about for the dollar. Gold is behaving poorly again. Certainly, on Friday it was rallying somewhat, but not anything spectacular, and it ended up closing slightly down. And again, today, slightly down. We have the saucer formation. I'm looking at this as potentially a handle on the saucer, which is bullish, but I don't have a lot of confidence in
it. Before you change that chart, I'm sorry, did you notice the huge discount that we saw on Friday?
Yeah, that means people were getting out.
Mm-hmm.
They were selling their gold at a discount.
So very bearish sentiment could lead us in a good direction for gold.
True. USO took a big dump on Friday. It was rallying today nicely, but then it closed close to its low. I don't see anything to make me feel confident here about the future of oil price. You know, it was sort of a default bullish position that because of the shortages, the price has to go up. But if we get another round of the COVID shutdowns, that's what drove it down to really low last year. And so I think there's some anticipation of that in here. I'm not saying that that's what I think is going to happen. I'm just saying I think that's kind of what is contributing to that downfall on Friday. T-bonds rallying nicely, but still got resistance here. And unless things really go south some more, I don't see this popping up through that resistance. And one more, and I didn't get a look at this today, but here we go. Sorry, that's the wrong one. Okay, we had a nice breakout above this triangle last week, but now after the Friday, it broke back down. I think there's an issue of the a flight to safety. You know, there are people moving into bonds. I can't imagine what's going on in their heads, but I think that's what it is, and that's what drives the yield down. So we had a nice bounce today, up 3.25%, and this triangle is still not resolved. And that will do it for me.
All right, let's go ahead and move over. So what I thought I would look at first was the sector CandleGlance. And this is a tool that I often use. I talked a lot about how to set up a CandleGlance on our last show. So I would welcome you to go check that out as far as setting up these CandleGlances. But they're really easy to get to as far as getting to that summary. And I will just give you a really quick peek so that it's easy for you to get a hold of that, because it's a very important page that I use often. So you just click that sector summary as I showed you, click sector CandleGlance, and there you are. In that case, you do end up with the S&P 500 as well to give you some context. So one of the things I noticed on Wednesday with my DecisionPoint Diamond subscribers, at the end of our Diamond Mine trading room, we always go to this sector CandleGlance and start looking for new momentum. Where is the sector to watch? Which sectors should we be paying attention to? And I have to say, it was a difficult choice. And I don't even remember which one it was, to be perfectly honest. I think it was utilities, because it's the only one that was sitting above its signal line. Right now, every single sector has the PMO, except in the case of technology. It's only off by 1/100 of a point, being below its signal line. So we do still have positive, we have PMOs above the signal line on technology and on utilities. But overall, when you look at this market picture of momentum-wise, the market is just not It's not primed for a good, for a nice reversal to the upside, new all-time highs. I just think it'll be really hard to see something like that when you have negative momentum across the board pretty much here on every single sector. Now, we talked about the bias assessment, and I have just a few minutes left, so I'm going to show you some of the diamonds of the week. So these first two I got off of scans just looking today on the scan engine that I use for the DecisionPoint scans. And I saw this one. It is a REIT. Real estate is considered a defensive sector, so it's certainly an area you could pay attention to. But before I really get into this, I do want to let you know that I am not recommending it for myself anyway. I have told my Diamond subscribers, I've been telling DecisionPoint subscribers to be very, very careful right now as far as expanding your exposure. So just that's the caveat before I do this. But you can see American Tower Corp setting up a nice double bottom formation here. PMO is turning up. Stochastics, they're still negative, but are rising nicely. RSI still negative, but getting ready to hit positive territory. I thought that one looked very interesting. We have EQIX, which was another one that came to me in my scans today. Real estate sector definitely seems to be the one for the day. You can see a nice double bottom. And in this case, you already have a positive RSI. You already have a PMO buy signal. You already have stochastics in positive territory and rising. And you can see relative strength is looking really good for EQIX. So I still like this one. Certainly a big move today, might see the pullback, but with that double bottom, I'd expect a move to test, well, at least this area of overhead resistance just based on the pattern height. So that seems like that's about where it wants to sit. That right there will be a little bit less than a 3.5% gain if it can get to that point. All right, and then my final one was one of the diamonds I had this week, and that was Moderna. And I really struggled to include this one for my diamond subscribers because after we had just gotten that break above the 20-day EMA. We had covered the gap, so all of that looked very good. But I was still, we hadn't gotten above this area of overhead resistance. So I went ahead and included it. And as always, I put in a stop level. I made this one very deep, mainly because of the volatility of Moderna. And, it's really, obviously, this one has turned out great. We now have that breakout here, and I would be looking for more follow on. You've got the stochastics are still very positive. And if we can get from the price it is now to this first area of overhead resistance, that's a 25% gain. If we can test that all-time high back in August, that's a 34% gain. So this, I think, is really the best diamond of the week. And that's all we have for you. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.